Are you looking to save money on your student loans and pay them off sooner? In this video, I'll show you how you can switch from monthly payments to biweekly payments, allowing you to pay less interest and pay your student loans off sooner. So what are biweekly payments? So instead of paying, say, $500 a month for your student loans now, you could pay $250 every 2 weeks. So what's going to happen, as opposed to making 12 payments a year, you're going to be making 26 half payments per year. How do you get that number? So there's 52 weeks in a year. Divided by 2, because it's every other week, you get 26 payments. If you divide that by 2 again, because you're only making 26 half payments, means you're paying 13 full payments. So you're making 13 payments a year as opposed to 12 payments a year. And there's some other bonuses helping you pay off your loan sooner that we're going to get into in a little bit. So I just realized I could do this with my student loans with Earnest. I don't know why I didn't find this sooner. It's a great way to save money, but I want to show you how easy it was to change with my Earnest student loans. So here's my student loans. I owe $56,153.20. I'm going to use this in a calculator later, so I'm going to copy this. You can see my monthly payment is almost $500 per month. If I click on the loan details, so if we scroll down a little bit further, what you're going to see, again, the monthly payment, the 5.01 fixed interest rate, and you can see here the payoff date for the original loan. So I've been making the monthly payments as it was scheduled. So this is when I should pay off my loan on August 8th, 2034. So that is almost 13 years. It's 12 years and 9 months to be exact. So it would be 12.75 years. So we're going to take a look at how much money I'm saving by making this change. And let me just show you how easy it was to change the auto pay settings. So you can see here, the next payment is this. I'm going to pay the full amount. I had to pay one more of how it was already set up. And then the biweekly payments kicks in. So you can see that I would be paying $247.42 every 2 weeks, starting on December 14th, the date that I chose. But here's how easy it was to change. So I could just change from biweekly. If I went back to monthly, then it's just going to go back to the same date on the 3rd of the month every single month. To go every 2 weeks, I could essentially go in and choose, hey, I want it to be the 16th and the 30th, and then from there of December, and then it would be every 2 weeks from there forward. So I made that change when I realized how much money I was going to be saving. There is a calculator. I'll link to the NerdWallet calculator down below in the description if you want to check it out, as well as Earnest if you're looking for potentially, say, refinancing your student loans. And with this calculator, going down here, so we had, this was my balance. It was 5.01%, and it was 12.75 years. Calculate. And then so scrolling down here is, I'll be debt-free 16 months sooner, and I'll save $2,300 on interest. So we can see the details here. So if I were to just make the monthly payment every month, I would have 153 months left making the payment. Here's the total interest that I would pay. By making biweekly payments, I would only make payments for 137 months, and this is the total interest. So the difference between this is the amount of interest that I saved, and then the 16 months is the difference between these 2 months to debt free. So what do you think? Does it make sense to switch to biweekly payments, especially if you get paid every other week? Say you get paid on Friday, maybe you could set up your payment for your student loans to be taken out the following Monday. So you're making a half a payment every 2 weeks. You won't really notice that you're making an extra payment throughout the year because it's going to coincide with every one of your paychecks. So by making biweekly payments for any of your loans, it'll allow you to pay it off sooner and pay less interest. There's also a calculator I found for mortgages, for example. I'll put that in the description below as well. So if you had a $100,000 mortgage at, say, 3% interest, and say you'd already paid off 5 years of your 30-year mortgage, and then we calculate this here, you can see the interest of $42,200 versus basically $37,000. And the amortization table, you can basically see the payoff difference. So you can see here so basically throughout year 25, you paid this one off, and this one during year 23. So with your mortgage, if you had 25 years left, you could be paying off your mortgage 2 years earlier by making biweekly payments. There's a lot going on with student loans right now. If you have federal loans, you weren't making payments or being charged interest for, I think it was around 18 months, but that's set to expire on January 31st, 2022. Does it make sense to refinance federal loans? Should you consolidate your loans? There's a whole bunch of questions you may have. And if you want me to create other videos about a topic, let me know down below in the comments. So if you want to see all of our other student loan related videos, I'll link to a playlist right here. If you want to see our videos on improving your credit, check out the playlist below. Hope to see you in those and future videos. Bye-bye.